Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, October 17th, 2018. Where do I start? Lots of stuff going on here as usual. Let's start with the basics. As I am doing this video blog, stocks are down, not by much. I mean, the Dow Jones Industrial Average yesterday put on 500 and something points. Right now, again, as I am doing this video blog, stocks are down about 150 points. I mean, this is really nothing, especially after a day like yesterday. You could almost kind of expect this. Dollar is slightly in the negative today. Bonds are slightly selling off today. Gold and silver at the flat line. Cryptos are also down a little bit. So I guess that's the theme of the day thus far. Now, we got some, I mean, seriously, it doesn't seem to stop, but no one hears about it. More bad economic news. Home builders missed the mark. I believe this is the second or third month in a row, and that could present a problem down the road. I want to talk about that a little bit here. Mortgage applications almost at a two-decade low. So these two dynamics are not good. Why? Well, it's the wealth effect. If the consumer here in the United States, this is how people's brain works, see the price of their houses go up, they start to get stupid. They take loans out against their home. They think it's never going to come down. Meanwhile, I mean, and this is no secret, home values all over the entire country right now are either stabilizing or coming down. So, I mean, look, let me say this while I'm on this topic. At this point, this is not going to affect the stock market. And again, at the risk of sounding like a perma bull, understand the market is fake. So, as long as the narrative is maintained that this is a very strong economy, the consumer is doing really well, although consumer debt, yet another record high. It doesn't stop. Every week, consumers bury themselves deeper in debt. And that also has something to do with the wealth effect and, unfortunately, with the news narrative that everything is just totally great. People believe that their jobs are absolutely secure. Again, that their homes are going to keep going up in value. So they keep borrowing. We've seen this before. I mean, not even that long ago. This is what led to a lot of people getting hurt big time during the last meltdown, 2008. So, but the truth of the matter is pretty simple. And again, I've covered this before. Every day, as long as the Federal Reserve is keeping their foot to the floor here, keeping rates suppressed, keeping the easy money going, regardless of what's going on anywhere else, at least for the time being, stocks will waver, but the trend is up. So this is my advice once again. Do not short the market. Do not short the market. I mean, just don't do it. If the market pulls back like a day today, which is, I mean, we didn't even say this is a pullback, gives a little back from a big rally yesterday, and who knows where this market will end up. I have no idea. A lot of the reason why stocks are down right now is because of IBM, which is a heavy weighting in the Dow, and it's down pretty strongly. But again, this environment will be maintained for as far as the eye can see, and the Federal Reserve will be used as a tool to keep the market rigged. Ignore rhetoric coming out of our president's mouth. He wants the Federal Reserve there. He needs the Federal Reserve there for now. And that's just the way it's going to go. It's not going to stop. A couple of weeks here for the midterms. Need I say more? All right, with that said, so keep these things in mind here, especially with regard to the housing market, because that may be the one aspect here of the economy that starts to rattle people. They're going to start asking questions. Hey, wait a minute. If our economy is so strong, then why is my house losing value? Why are mortgage applications now at a near 2-decade low? Why are home builders backing off? A lot of questions will start getting raised. People might get scared. They might list their homes. You just don't know. So, but again, in the short run, like I just said, expect stocks to continue their run higher in this environment. And I don't care what earnings are. I don't care what forward guidance is. PE ratios don't matter. It's an environment of extreme distortions. And a lot of the distortions are existing in people's heads because they're being twisted by the mainstream media, by a fake narrative. It's from the top down. You all know that. It's crazy. All right, with that said, let's see where this market ends today. Going to be interesting as usual. I will see you later.